Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show. Joining us on the show today are technical analyst and mentor NS Fidai, Raja Venkatraman of Chart Advice, and Dyaneshwar Padwal of KIFS Securities. Before we begin with the show with our analysts, let's bring in Yash Upadhyay, who has a chart on Aurobindo Pharma. Good afternoon, Yash. What does the chart indicate?
Not so good picture for Aurobindo Pharma actually, Darshan. So a sell signal is coming in on the counter, and we're taking a look at the longer term weekly chart on the counter. Now we saw that off recently it had been in a bit of an uptrend. It went from the levels of close to about 700 to as high as 850 with this large white candle forming just 2 weeks back. But the entire move on the upside was taken out in the next entire week, where we saw a larger than average fall as well, completely erasing those gains. And again in this week it has fallen. In fact, the stock has been trading lower for the last 6 consecutive trading sessions, which is its longest losing streak since February of 2018. The yellow line over here, that is the 55 weekly exponential moving average. That is very close as well. It's at the mark of about 732, and we've seen time and again that whenever the stock has managed to close below or has given up that mark, there has been a big slide on the lower side. The lower two panels are the MACD and the RSI. The MACD on the weekly time frame too has given a negative crossover in the sense that the MACD line, which is the blue line, that has crossed below the signal line, which is a big negative as far as the counter is concerned. The RSI too has been forming lower lows and lower highs on the weekly chart, which is another sign that there could be weakness as far as Aurobindo Pharma is concerned.
And Yash, what's the historical trend where every time the MACD has given a sell indication, what's the average return and what's the time frame?
Right. So section 3, after the last 5 times that this has managed to happen, the stock has managed to fall close to 5.5% over the next 4 weeks, which is the 1 month period.
Okay, that's the view coming on Aurobindo Pharma. Thanks so much for that. Yash, NS, what's your sense on Aurobindo Pharma?
Actually, it has fallen quite a lot. Now, I believe the stock has a support around 740. So, what Yash is saying is we can see some 5% fall from here approximately. So, 740 would be a good area to go long. Right now, I wouldn't go short at this area right now.
What level would you go short on?
No, I would go short on rice rather than go short.
So by what level? So if it rises to what level would you
maybe 800 approximately.
Okay, and at this level you won't do anything?
No, I wouldn't. I would like to buy it around 740-ish.
740. What's your sense, Raja?
Yeah, I would also be in line and remain a contra buyer here, because it has come into good supports around the 750 to 770 zone. And there it is actually on the daily chart, it's forming a hammer. And after the rise since Feb, it has actually retraced 50% of the from the highs. So it actually augurs well for the prices. So one could actually initiate a long opportunity here, because it's at a very low risk.
At the same price, at 775?
Yeah, you could initiate a buy at the current levels, keeping a stop loss below 750 for an upside towards almost around 820 to 830.
Okay, and Dyaneshwar, what's your sense on Aurobindo Pharma?
Well, Darshan, if you look at the overall chart structure, so we have seen that from the last 9 months, Aurobindo is moving in a very tight range. 830 on a higher side and 700 on a lower side. And again, the recent chart suggests that the 830 could be turned as a very strong resistance for the bulls. And again, the stock has been taken out from the 830 towards the 750 odd mark. And the lower time frame suggests that the intermediate trend line has been broken down at the level of 785, 790. So if stock is managed to give the pullback towards the 790, so that could be a great great selling opportunity, because risk reward ratio is quite favorable at that level.
Okay, that's the view that's coming in on Aurobindo Pharma. Just hold on before we start with our guest. We had a new listing today, and in fact Yash only spoke to the joint managing director of Newgen Chemicals. Harin Kanani is the joint managing director. It listed at a substantial premium on the bosses. Just started off by asking him about the demand scenario. Let's listen in.
The Indian chemical industry has been there, like for example Newgen, which specializes in bromine and lithium based company, has been doing this since almost 1991. Throughout this 28-year journey, we've seen lots of ups and downs. Economy opening up when the custom duty went from 150% to 15%. dot-com bubble, Lehman crisis, and through all, the chemical industry survived, and not only survived, is now thriving because of the innovation, because of the good chemistry which most of the Indian chemical industry has been doing, and majority of the people who are now significant players also have a very good compliance to the environmental laws, which was a disadvantage in the past, but now today the patience which we've kept has now proven. And as you can see that not only it's not just the environmental regulations which are being clamped down in China, but overall, the world has acknowledged the specialized skills we have in chemistry in India. And today they are coming to us with challenging projects, and we are very happy to be part of this journey of the Indian chemical industry. Even in Newgen, almost in spite of being relatively smaller as compared to our listed peers, almost 50% of our business comes internationally. And this is basically the sign of faith which the international community has on Indian chemical industry, which is what is taking us forward.
That's right, sir. And in fact, a few of the earnings of some of the specialty chemical makers which have come for the fourth quarter, they suggest that while the international market has not quite been robust, we have seen strong demand coming in from the domestic players. And I believe you also have a robust, customer base as far as the domestic business is concerned. How are you seeing the demand there, and do you expect the domestic growth to outpace that of the international business?
It's too early to tell, and I think we are seeing demand both from our domestic clients as well as international clients. You have to remember we are a B2B company, and we make this specialty bromine and lithium compounds for customers who are into API and agrochemical. So even these companies are seeing a good international demand, and what we see is because of this demand also their demand increasing, as well as international players wanting more favorable and additional sources within India. So both these are helping us in our growth.
I remember, sir, speaking to you at the time of the opening of your issue price, and you had mentioned how crude oil prices, they don't seem to have an effect as far as your EBITDA margin is concerned. But over the last 2 to 3 years, in fact, it has been largely stable around the 16.5 to 17.5%. And with crude not being a cause of concern for your company specifically, how do you see margins shaping up going forward?
So I think one of the big change in Newgen's journey came from, so we started in 1991, and a big change came for us when we acquired the site in Baroda in December 2016. Since then, our capacities have increased, and also our capacity utilizations are now slowly ramping up at the new Baroda site. So so in the first 6 months, as you know, were 53%, and as I also discussed earlier, that for the third quarter, it was almost upwards to 80%, which is the peak utilization. So as our utilizations improve, because of the capex that we have done for debottlenecking and improving the facility, this is what is helping us improve our margins, along with a better product mix. So as I mentioned with you, Newgen is also now focusing on more complicated chemistry, advanced intermediates. So a good mix of the advanced intermediates, custom and contract manufacturing, and better utilization is all driving our operating profits. So even going forward in the next financial year, since we'll have this high utilization for the whole year, we expect some improvements in our operating margins, as well as, we expect also some of the interest costs to kind of come down, so also improve in our bottom line.
Okay, an extremely strong listing by Newgen. It's trading up by 23% and it's stuck at that level. But let's again get back to hot money technical. Let's begin the discussion. First chart is from Fidai, and it's on the Godrej company, which is Godrej Properties. Let's pull up the chart. Are you bullish on Godrej Properties?
Yeah, I would be bullish on Godrej Properties, and would like to buy it around this area where, around this, there is multiple supports. That is 200 DEMA plus the trend line that was acting as a resistance earlier. and this support works out to be something like, you can buy between 770, 735. Right now it is in the zone. So it is a very good area, very strong support, multiple support. 200 DMA is supposed to be annual support kind of, means, and I expect the stock to go up to 850, 920 and even up to 990 on the higher side in maybe 3 to 4 months over a period of time. This would be a good area to go long. So
which is this area? This will come to 735?
770, 735.
Okay, that's the range that you would
I would like to keep a stop loss at 714 in this place, because there could be some volatility in extreme short term, so a bit deeper stop loss because of the current election scenario and all. That's the reason.
Okay, so it's more like a positional call.
Yeah,
on
it's
Godrej.
a positional call. Yeah.
Okay, thank you so much for that, NS. Raja, would you accumulate Godrej Properties at 765?
I would not be a buyer in Godrej Properties right now. The stock is on a decline. The momentum is also weak. And like NS pointed out, yes, it is at a crucial support levels around the 760 region. Because if the 760 levels were unable to hold on a daily chart, then it could actually travel right down towards the region of next set of support is only around 690 to 700, where there are more additional set of supports where I could look to buy into.
Okay, that's the view that's coming in. What about you, Dyaneshwar? What's your sense?
I would go with the NS because recently we have seen that the intermediate trendline support has been taken by the stock at the level of 753, and 750 is a very aggressive entry. One can go long at the current market price, but keep in the mind that the 745 should not be break, or if it is close below the 745, traders should exit, and for an pullback, 800 could be an possible target.
Okay, that's the view that's coming in on the first stock, and that is Godrej Properties. The second chart is on Siemens India, and it's from Raja. Raja, what are you recommending? It's a sell? Okay, obviously a little bit of fundamental news also coming in, which I'll talk about, but yes, the chart first.
Yeah, the stock had been on a sharp rise since Feb, but then in the month of April the stock began to stagnate at higher levels, and ever since the last few weeks the pressure has been building up, and the last 3 candles you can see has been strongly negative. And what has happened is this gap region out here, this gap region has been broken now, and the momentum indicators which I have used, both the momentum indicator, if you see I've used the ADX as well as the MACD. MACD is showing that the momentum is now loosening, and now you could expect some pressure here, and the ADX is saying that the negative pressure is now taking over. With the negative pressure taking over and the ADX is showing some strength, all this put together suggests that there could be more downside expected in Siemens.
Okay, that's what level should you short at? This level should you wait?
Short at current levels, and since it has fallen, you could use rallies towards 1110 as an additional opportunity to sell. Keep a stop loss about 1130 for a drop towards 1050 and 1030.
Okay, thank you so much for that. But Raja, what about you, NS? What's your sense on Siemens?
Well, stock has fallen very sharply actually. It has given almost 15% downside till now, and it's almost nearing a very good horizontal support area, horizontal trend line around 1065. So I would prefer to buy with today's low as a support, and maybe add on dips up to 1065 and keep a stop loss at 1050.
Okay, what about you, Dyaneshwar? What's your
I
sense?
agree with NS because recently the horizontal support is placed near about 1070 mark, but the recent chart structure suggests that I wouldn't go long at this price or 1070. If it is given a pullback towards the 1100, 1120, so that could be the shorting range because risk reward ratio is quite favorable at that level.
Okay, that's the view that's coming in on Siemens, and the fundamental reason why Siemens is down 4% is that overnight the parent actually decided to demerge the power and oil business, which is almost 40% of the Indian business revenues and almost more than 50% of the EBITDA. They've done this in the past, in which they have actually hived off company and then they sold it to the profitable company, to the parent, which obviously was a corporate governance issue. So that's the worry that the market has on Siemens, and it's down for the 3rd day in a row. So that's the fundamental reason. Our copy will be out very, very shortly on Siemens, and you can read it on our website. The next chart is from Dyaneshwar, and it's on Hero MotoCorp. Let's pull up the chart. Dyaneshwar, what sense are you getting on Hero MotoCorp? It's been rather weak over the past few days. Are you bullish?
Yes, of course, Darshan. If you look at the overall chart structure, this is a monthly candle. If you look at the higher time frame chart, so the long-term trend line is taking support in case of Hero Motors, and right now we are here. Again, we are taking the support of the long-term trend line, and simultaneously, if you look at the supportive oscillator like an RSI, can you just zoom in?
Yeah.
Yeah, if you look at the RSI, so where we have observed that the RSI is making new low, but stock is not managing to make a new low. So that is a hidden diversion. That is a bullish call coming from the RSI. So I am expecting that the stock will take a support over here and give the pullbacks towards the 3100.
Okay, 25.25 is where the stock is right now. Should you buy at this level or should you wait?
Current market price is a good buying opportunity. This is an aggressive bet. If this stock is close below the 2250, so this is trend line mark over here. This is a 2250. If it is close below the 2250, so traders should exit from the stock and stay away, because if the trend line is broken, the stock may fall further.
Okay, that's the view that's coming in on Hero MotoCorp. Thank you so much for that. Raja, what's your sense on Hero Moto?
Hero Moto has been in a state of decline, and over the last few weeks, if you gather around the region of around 2,500, it is trying to sum up some courage to go up. But then the momentum indicators are still on the weaker side or on the sideways side. So if you are looking to take this on a positional play, so maybe over the next 1 month, then it could be approached. Otherwise, I would like to stay away from Hero Moto. Right?
Okay, what about you, NS? What's your sense?
Well, I would like to go long and go with Dyaneshwar, and I would like to buy it near around 24.95 and keep a stop loss at 24.85. Below 24.85, I would be not holding this stock at all.
Okay, so buy on dips is the strategy that's coming in on Hero MotoCorp. So that's the first round of stocks. Let's discuss the second round of stocks. NS Fidai has a chart on Dredging Corp this time around, not very well covered in this show earlier also, but is it a sell?
No, it is a buy actually.
Okay.
If you see this, it's a huge triangle from here that is being made in Dredging Corporation. The stock has maintained this respect around these lines. So I would believe this could be a small false breakout today's low, and we will have to see whether it will hold the red line, because red line is the nearest support that is happening here from this area. Okay, so usually what happens is whenever there is a major crack from a triangle, people tend to, most of the technical analysts tend to have a view that it is going into a negative zone and would like to be bearish on the stock. But then there is one more support that is, not so easily visible. So, like many people don't look at it from that perspective, because it is broken a big triangle. So, we are looking at the small red line here, the dotted red line. If it holds, then we have a good opportunity that the stock can jump up quite substantially up to 390, 425 also. And one should buy here around 355, 340. Keep a very small stop loss of maybe 6 rupees, 334 should be a stop loss. And we can expect the target of 395, 425 on the higher side. That could be just up to here.
What's the time frame?
Time frame would be around 2 to 3 months.
Okay, that's the view. It's a positional call on Dredging Corp.
Yeah.
Thanks so much for that, Raja. Dredging Corp, would you venture?
Yeah, I would not like to initiate any long in Dredging Corp, because the momentum is not supporting. I am a firm believer that if the momentum is supporting the price action, that's when you should initiate a buy. And right now I am not seeing that, so I would like to stay away from this.
Okay, Dyaneshwar, what's your sense?
Yeah, right now if stock is managed to close about 365, so that could be a great buying opportunity, because recently we observed that the head and shoulder formation is done and stock is taking the support of neckline. So if it is close above 365, then I would go long.
Okay, that's the view that's coming in on Dredging Corp. Diverse views coming in. The next chart we want to discuss is on Biocon, and Raja has a buy call on the counter. Pull up the chart and let's see why Raja is bullish on Biocon.
Yeah, Biocon has been in a range, and then the recent pullback which we have seen, it has come into Ichimoku cloud support. So I've used the concept of Ichimoku, and this cloud support actually suggests that this fall in Biocon could be over. Yes, the charts are looking negative, but then this cloud support acts very well and could initiate some longs opportunity here, because this support is a very crucial support. And today, despite all the negative news, it has managed to hold on to these levels. So one could initiate a long if they want to have a contra position against their shorts, which we are seeing over the last 3 days.
Okay, well, it's at 548. What level should one go long?
You can initiate a long right now. The stop loss is at 535 for an upside towards the region of 580 and 600.
Okay, that's the view that's coming in. Thanks so much for that, Raja. NS, what's your sense on Biocon?
Yeah, till it holds 540, I'm okay with the stock. I would prefer to buy this stock around 540, 542 and keep a tight stop loss at 534 maybe. On the higher side, we can see this stock go up to 575, 585 also. So I agree with Raja absolutely here, but below 540 or below 530, the stock can fall very sharply. So traders have to be very sharp with their stop losses, and they should execute the stop loss if it gets hit.
Okay, and what about you, Dyaneshwar? What's your sense?
Yeah, of course, I agree with both of these guys because in July 2018, the stock has made a low of 543, and recently we have seen the same price and stock is taking support near about 540 level. So that could be a very crucial level. So right now it is a very risky bet to go long. But traders should keep a stop loss of 540 on closing basis. If it is closed below 540, we may see the further escalation towards the 450 also.
Okay, so that's the view that's coming in on Biocon, and the final chart, at least from our analyst, is from Dyaneshwar, and it's on ITC. Dyaneshwar, we can have you. What's your view? I believe it's a sell call, right?
Yeah. Recently, on a lower time frame, if you look at the ITC chart, so it is moving in an escalating channel. Before going to the chart, I would like to elaborate on the FMCG sector. As per the relative rotation graph, FMCG sector is moving in a lagging pattern, wherein the relative strength and momentum is very less. So that's why we picked up these stocks from the FMCG pack. Recent consolidation suggests that the stock is moving in a very tight range of 298 on a lower side and 311, 312 on a higher side. And recently we have seen that the escalating channel has been broken down. So it would be an conditional sell if stock is managed to come out this consolidation area, the green mark over here, that is in 298 level. It will break 298, then only we may see the further fall towards the 270.
So would you sell only below 298?
Yes, I would go short on this counter only below 298.
And if it breaks, what's the downside?
Yeah, downside would be at 270 level where the stock has started the rally, and I will keep a stop loss of 312.
Okay, so tight stop loss. Thank you so much for that, Dyaneshwar. NS, ITC.
Agree absolutely with Dyaneshwar, but I would like to buy, keep a stop loss below 294.
Okay.
And if it holds 294, then I would be long here. But if it breaks 294, I would be going short on this stock.
Okay, and Raja, what's your sense?
Yeah, I'm in agreement with them. There is a negative divergence seen on the charts, but the breakdown is yet to be seen. So unless and until a breakdown occurs between the levels of 294, 296, then one should not be actually looking at it from a shorting perspective.
Okay, that's the view that's coming in on the final stocks, at least from our analyst, and that was ITC. And before we end the show with the analyst, let's begin Yash Upadhyay, who has a chart this time around. Yash, which stock do you have for us?
It's NTPC actually, Darshan, and we are again watching out on the trender indicator, which is suggesting that these are crucial levels for the counter to watch out for. The green line over here, which is the trender line, is at the mark of 132, which is within 1% of where the stock is trading at the moment, which is 133.05. As the condition stands, should the stock manage to close below the mark of 132, which is the trender line's mark, the trender line will flip its color from green to red. And as we've seen historically, there have been a long period of time when every time when the indicator has flipped either of the colors, be it red or be it green, the stock has moved significantly on either of the sides.
What's the average return?
So Darshan, 3 out of the last 4 times that this has managed to happen, the stock has fallen on an average over 11% over the next 1 month.
Okay, you can clearly see the trends, the red trends that is there. NS, what's your sense on NTPC?
I agree with Yash, but keep a tight stop loss around 130, and if you can hold out for some time. If it breaks 130, then what Yash says could be very much possible.
Okay, Raja, what's your sense?
Yeah, overall setup actually seems to be on the negative side. So one could actually look at it from a sell perspective if it breaks down below 131 for a drop towards 121, because the momentum indicators are definitely heading towards the weaker side.
Okay, and what about you, Dyaneshwar?
Yeah, if you look at the overall chart structure, so recently we have seen that the impulsive movement has been happened in the NTPC, and we have seen the rally from the 108 towards the 140, and right now the stock is consolidating in the range. So any dips comes towards the 125, 126, that would be an 50% Fibonacci retracement. So that could be a great buying opportunity.
Okay, and before we end, we have a couple of viewer queries that we want to highlight, and they've written to us on social media platform. The first one is from Dipankar, who wants to a view on Whirlpool. Let's pull up the chart of Whirlpool. Let's see what exactly the chart is doing. NS in the meantime, it's down 2%, 1340. NS, what's your sense?
If it comes down to level 1280-ish, 1285, 1280, one can go long. There are multiple supports in that area. Right now, one can avoid buying at this level, and on the lower side, keep a stop loss below 1240.
Okay, Raja, what's your sense?
Yeah, in the region of around 1290, there are some decent sets of support seen. So if he has not initiated any long position and he wants to initiate, he can look at those levels for a recovery where he could initiate. Otherwise, if he is holding a long position, then below 1280 should be discarded.
And Dyaneshwar?
Yeah, I agree with the NS because we have seen that the 1260 would be a great support. If it is holding a position, so he can get exit on the higher side. Any pullbacks comes, he should get exit and get enter into the 1260 level.
Okay, so accumulation at lower levels for Whirlpool. And the second query we want to take is from Sindhu Gururaj. She invested in Eicher Motors at 25,000 rupees. She wants to know what the charts are suggesting. 25,000 is when she has. I think Eicher probably will be at a lower level. Let's pull up. It's at 20,000, almost 5,000 lower. What do you suggest? What does Eicher do?
I would say one can hold this stock and keep a tight stop loss below 19,790. And stock is holding out in this, difficult market conditions. So shows there is some strength in the stock. Needs to cross actually 21,500. If it does that, maybe like the investor could get back their money also in maybe 2-3 months.
Okay, what about you, Raja?
Yeah, the stock is attempting to revive, and if it doesn't trade below 19,000, one could hold on to this to the stock and could actually look to add on, because right now the stop loss is very close at hand and could actually leverage average their position, and you could use this rise in this to exit.
Okay, and what finally?
Yeah, on a higher time frame, we have seen that the recently stock is moving in a lower top, lower bottom formation. So any pullbacks comes towards the 2,400, the investor should get exit from the stock.
Okay, that's the view that's coming in on Eicher Motor, but with that we're completely timed down today's session of Hot Money. Ask BQ comes up next. Many thanks to all of my guests who came in today. NS, Dyaneshwar, Raja, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.